Thanks for joining me here for today's presentation. It is Lloyd Bowman for Lloyd for realestate.com. And we're going to be discussing how to determine what your multifamily investment property is worth. And we are dealing in the commercial space where we're dealing with 5 units or more. We will discuss what the value of the property is worth to you, as the property owner, and also how to calculate the numbers on that. We will also do a calculation as to what your investor buyer will be looking for as far as value. In today's goals, we're going to establish the value of investment property for you, your return on investment. We're going to determine what the specific return on investment is based on a preferred cap rate. You're going to do this by calculating the economic value of the property. Also, we're going to look at the value to your investor buyer and use the same calculation to determine the value for your investor buyer who is seeking a specific cap rate. Also, know that the general cap rate for the area in order to make this calculation. So you will need to know the general cap rate for the area in which your subject property is located. So, what is a cap rate? Well, it is the rate of return on investment property based on the income that the property is expected to generate. And we go about getting that cap rate. Well, cap rates are calculated by dividing the net operating income, which we call the NOI, or the rent, minus the expenses on the property, by the market value of the property. So, what is the net operating income? Well, it's the total revenue generating income minus the expenses, but we're not including the debt service. So, we're not going to include the mortgage on the property. And so, we're going to take a look at how to calculate the economic value of the property. The value, which is V, equals NOI, or the net operating income. We're going to divide that by the cap rate. So V is the economic value of the property, the NOI, the net operating income, and CR, we're going to use that as the capitalization rate or the cap rate for short. So, for example, let's say if you're looking at a property that produces $3,000 a month, net operating income from your operations, then your NOI, your net operating income, is going to be $36,000. And so that's 3,000 times 12 months, which would give us an annual return of $36,000. If you are expected to earn a 10% rate of return on your investment, and your cap rate or your CR would be 10% or 0.10. So therefore, value is equal to the net operating income divided by the cap rate or the CR, which is value is $36,000 divided by that 0.10. You have a valuation, economic value to you as the property owner. You can expect to get around $360,000 for your property. That's how you do the calculation on that. So now, what is your property worth to your investor buyer? Michael Lantrip, writer of 50 real estate investing calculations, he says value, it's a matter of opinion. In fact, it is truly that. And you use the same value calculation to determine what your property is worth to an investor buyer. We're going to find a cap rate for what the properties in the area are producing. By knowing this number, you can determine what your buyer be willing to pay. So a commercial broker can give you the current cap rate for properties located in the surrounding area for your subject property. So for example, you have a 10 unit apartment building and the NOI, net operating income is based on the last 12 months. It's going to give you $45,000 annually. If your investors are currently accepting a 6% cap rate, and your calculation is going to be V, which is value, equals the net operating income divided by the cap rate or CR. So value is equal to $45,000 divided by zero point zero 0.06. And so you'll have a valuation of $750,000, which means you could fairly market the property for sale for $750,000. So here's why we like investing in multifamily apartments, dealing with the huge benefits that it offers. Starting first off, the cash flow. It's not many real estate products out there that's offering the kind of cash flow that you're getting with multifamily investing. Also, number two, the financial leverage, where you can put small down payment and leverage the amount of the mortgage and then get that kind of cash flow. And then number three is asset appreciation. A lot of times you get that right when you buy. And then number four, the particular tax benefits that you get. You can do a 1031 exchange where you're able to defer the taxes on your property. And you have some other tax benefits as well. So those are the main four huge benefits that we see we invest in this kind of real estate investing. You can give me a call at 708 910 8741, 708 910 8741, right here in Chicago. It's Lloyd Bowman, and I'm from LloydForRealEstate.com. You can send me an email as well. It's LloydForRealEstate.com. I'd like to thank you for taking your time to watch this presentation.